Next topic, marginal tax rates. And again, this is a topic I don't think people a lot of times understand what is meant by the term marginal tax rate. But Jennifer and me have done some real life examples where we were sitting with clients saying, do you understand that the marginal tax rate is really the true amount of tax that you're paying? So Jennifer, do you want to explain a little bit about the progressive tax system and how marginal tax applies or how you use it with your clients?
Okay, so the taxes are set up on a sliding scale. And so you are, and I'll see if I can, I'm just going to show you my book here. So this book here shows the different, tax rates in that. And I'll try and give you guys a better copy of it as well, but at least you can see that it's set up on a sliding scale. And so like if you are, I'm going to use married filing joint because that tends to be a lot of people that I see. If you make between $0 and $19,750, you pay 10% tax. If you make between $19,751 and $80,250, you pay 12% tax on that amount. Once you go over the $80,250 up to $171, that jumps you into that 22% bracket. Okay, you do not pay tax on the entire amount at 22%. You only pay tax on at 22% on the amount over $80,251. And so what you have to look at is what is your income and what is your actual tax. And I have a lot of clients that, they might be in that 22% bracket because their taxable income is $90,000, but their effective tax rate is essentially like 12.2% or less. And it just kind of depends on, where they end up and how that works. And Greg and I have worked with several clients that had it in their mind they did not want to pay more than 15% tax. Well, when we started working with them and we got to analyzing their tax returns, their effective tax rate was somewhere in the neighborhood of 9.7%. And they were very adamant that they did not want to pay more than 15% tax. Well, they weren't. They were only paying 9.7. Well, then we were starting to run into some financial issues with deferred money and those types of things that we needed to move that was very risky. So what we ended up having to do, which was very hard for some of our clients to get their head wrapped around, was you need to take in more income because you're only paying 9.7% tax. You're not at the 15%. And basically, we were moving large sums of money to get them to that 15% tax because they were still in that 9.7% effective rate. And so, to wrap your head around it and to understand it, you have to look at that. And so I know there are a lot of tax software programs out there that will give you a comparison, over, the last 3 years, what's happened, this year and the last 2. And then usually down at the bottom of those pages, at least with the Drake tax software that I use and the Lacert tax software that I used to use, they always gave you the effective and the marginal tax rate, down at the bottom. So the marginal rate is what bracket you actually ended up in, and the effective or the marginal rate is, what you actually paid for tax.
Mm-hmm. And that was a huge difference maker in that situation that Jennifer was talking about, because it helped transition money out of pre-tax accounts or annuity contracts into non-taxable accounts upon the passing of those clients. All right, which led to a better scenario to leave a better legacy or a bigger legacy for that next generation. And so again, that's why marginal tax is a pretty important concept that I don't think a lot of people have a true understanding of how it works or how much importance it is to the long-term plan.